I hate the bidding war strategy. I really hate it.
I hate the bidding war strategy, but I like to use it as an indication that the sellers are probably going to list more, which means that the buyers have more options.
Look, I get it. The Toronto real estate market is confusing. Whether you're a new or experienced investor or just looking for a home to raise your family in, join us at Broadview Table Talks as you sit around the table with my friends and talk about the real estate and the ever-changing market in Toronto.
Welcome to Broadview Table Talks. We are the #1 rated podcast. No, we're not #1, but thanks for listening anyway. So
#1 in Riverdale for real estate.
#1 to our mom. #1 to your mom. Okay, let's got some sound effects now. Cool. But today I want to talk about an interesting article I saw today on the internet, and it was basically, if you're buying a property in the spring market, what should you expect? How to prepare for it, right? Mm-hmm. So what have you guys noticed in the spring market so far?
I mean, typically, and you could already see the activity. It's actually increasing. So it's picked up on, the sales volume as well as everything coming onto the market. The listing volume has gone up recently.
Right. So for reference, we're in March 2022, mid-March.
You mean March 2024?
24. I don't know why I said
2022.
Anyway, we're mid-March. Okay, sorry about that. We're mid-March, but from last year, it's gone up quite a bit.
Yeah.
Yeah, 15% change.
In average price. Right.
Sales volume is a lot more activity compared to last year.
Right. And that's probably because of what's happening with the Bank of Canada rates, right? They know that they can't raise anymore. We know that, in fact, they should be dropping. It's just that they're afraid of the housing market being unleashed because of that. Because as you know, housing is the largest part of, or shelter is the largest part of a CPI basket, which controls inflation.
Yep.
And you know what? I just recently realized, or I learned, actually, I should know this, but it just kind of came back from first year economics, high school economics, really, price stability and what that even means, right? Because if prices are increasing at an unpredictable rate, 8%, 10%, 12%, then suppliers can't estimate what their costs are going to be. We saw it in the construction industry, right? In the new housing industry, where construction materials, a piece of plywood is like $70 at one point. If you remember that. And right before that, it was like $20 or $15 even. So if that's unpredictable, then what happens to the rest of it? It's just whole like spin-on effects on the rest of housing and everything else that it comes into, right? Not even housing, there's like shipping for durable goods, things that like clothing, for example, or food or whatever. Right? Whatever makes it so it just kind of all spirals out of control. So that's why prices need to be stable so we can make accurate predictions on what our input costs are if we're a business. And if we're going to be buying things as consumers, it makes a big difference.
It does.
Yeah. So it is an important thing, especially for, people on fixed incomes, like elderly people, things like that. People that just, don't have the variable income.
Yeah.
So it's a big issue. And I think it's a big issue where, unfortunately, as a byproduct of that, to control it, they have to increase interest rates, and some people are really going to get hurt.
Yeah.
But it's a small sacrifice for saving the economy and restoring price stability. Anyway, so as you know, the bank, I think the interest rate hikes that happened 2 years ago are starting to work. We're starting to see inflation come down. At some point, they said inflation was transitory. You guys remember that?
Yeah.
Right. And it worked out that it actually is transitory because it came down from 8% to like 3% in like a quarter or less.
Yeah.
Which
we really felt the pinch though.
Yeah. Some people are getting really hurt, right?
Yeah.
So things have to be done. And it really does make a difference. So we're starting to see it in the real estate market now. Buyer sentiment is a little bit higher. People are starting to go out shopping. The weather's getting warmer. We have to turn the air conditioner here, right?
I know. More clients out getting pre-approvals.
Yeah.
Knocking on our door saying, hey, we're thinking about jumping in now.
But that means, do you find that the market's extremely hot, or do you find it kind of warm?
I think it's warming up.
Warm?
Like it's not super hot like it was, like 3-4 years ago.
What are you seeing? So you're out there showing leases. You're out there showing homes for buyers as well too.
Yeah.
What are you seeing in the leasing market?
I'm seeing properties going pretty quick, like less days on the market, multiple offers. And
for leases?
Yeah.
Okay. But not as much as it was before. But we're still seeing them, right?
Yeah.
But not as much.
Yeah. Seeing a lot of people like dip their toes in the water just to test it.
How much does this all like contribute to, like, what if it literally is just spring market? It's just everybody's starting to be active again because it's no longer winter. You know what I mean?
So it's a lot of seasonality with
yeah.
that, right? So typically the peaks of when the real estate market is hot is spring and fall, like the two little camel humps, right?
Yeah.
You look at it in terms of activity. You know, in August and July and all that, everyone's thinking about vacation because the weather's warm. We only get 2-3 months of good warm weather here, so everyone's just doing it, right? They're not
Basically
going to
cottage season for Canadians.
Sorry?
Basically cottage season for
Cottage
Canadians.
season. Yeah, for sure. Cottage and vacation season. So that's why you see, obviously, and I'm just being obvious here, right?
Yeah.
Like the spring and fall markets are the hottest. Yeah, so we're starting to see a bit of that now, and it's becoming peak season.
Yeah, but obviously, like as you said before, it's a little bit more or abnormal almost, just because we're doing a lot better than we did last year, and that's the whole everything we talked about with interest rates.
So if you guys remember, in last year we had a pause in January for a couple of rate hikes for a couple months.
Yeah.
And things started going crazy because we just came off a rate hiking cycle for the previous 8 months, 8 announcements before that. It was just increased by quarter point or half point, whatever. It kept increasing. And I thought there was no end to it. But then January, they finally paused, or I think January was the last one. I think February they paused. And it just felt like things kind of got crazy again in the market, if you remember last year.
Yep.
So to be at a higher percentage point than where we were last year, 15% higher in the average price, and even what new is
33% change from last year.
20%, 18% more sales than there were in last February.
Yeah.
That's big news. We'll see what happens in March for March's number. So again, just so you don't know, just to give you guys don't know, the stats for March show February's numbers, right? Because March hasn't been complete yet, obviously.
Yeah, we have to compile the data.
Right. So it's kind of confusing when you say the stats for
March, even though it's
but
last
that's
month.
February's numbers. Or do you say stats for February, but then we're in March? Confusing, right?
Yeah.
Anyway, whatever. The point is that I think that this spring is a little bit different. I think this year is going to be a little bit different. I don't think it's going to go crazy. We'll actually save the predictions for later on in this segment. But for this segment, let's talk about what's happening right now. Michael, Neil, what are you guys seeing out there?
No construction. Or slow construction, to be precise.
That's a good point. So there's not a lot of new construction sales going on, right? Because the projects don't pencil out with today's interest rates. Buyers aren't buying new construction because the premium on everything that's brand new, obviously, there's a premium for new cars versus used cars. New clothing versus vintage clothing or used clothing, whatever you call it, right? New is always more expensive, even though it's the same product, similar product. And there's a market for both. There's a market for new and there's also a market for resale.
That's right.
Housing. But at a premium of 30%, 40%, wherever it might be.
Like, is that even worth it at this point?
That's the thing.
That's the conversation, yeah.
Right? So like if you're looking at $1,600 a square foot for brand new construction in downtown Toronto versus you get something for $1,000 or less, like that's a huge premium.
Yep.
You know, so
For something that you take the keys for in 3 to 4 years.
right. So some people actually are willing to pay that premium because of the time it takes to save, and they think that yes, the speculative nature where they think that the prices are going to go and speed up to catch up to that, but it may not.
Yeah, and then speaking of like price stability, they just built so much, just a perception of like, or it adds to their perception of, no, what's the word for it? Uncertainty. So exactly, they were like, why would we purchase this?
Yeah.
Right, and that doesn't build confidence for the builders, and then just a whole thing.
Yeah, because not even that the confidence that they can take a risk. It's more that unless you're self-financing a project, which I don't know, there's not very many people that, even if you can do it, it's like $1 billion, $500,000 to $1 billion to build a building.
Yeah,
And a lot of developers can do it, but a lot of them can't. And even if you can do it, you wouldn't want to do it.
Right.
they need to be backed.
It's a lot of risk.
Well, you got to use banks' money to make it, because you can use that capital, spread it out, do a few more projects, that as opposed to just put all your eggs in all one basket.
That's right. It's a lot of risk for one project.
Right. So now the problem is banks won't lend to a developer unless there's proof of concept. And how do they show proof of concept? Because they want their money out at some point, right?
Right.
And the way to show proof of concept is they get 70% sales.
Yeah. Pre-sales.
So if you get 70% pre-sales, then they'll get through construction financing. And if that doesn't happen and you only sell 20% of it, 30%, 50% even, you're not going to get your financing, which means that the project's going to continue dragging on and the site plan approval is going to expire.
Yeah.
And you have to go reapply to get those permits, which takes a long time.
Yeah.
So all in all, the cycle can take anywhere from 7 to 10 years for new projects to get launched.
Yeah.
And right now there's no buyers, so developers are hesitant to launch. At the same time, if they don't launch, the raw land cost, the financing on the raw land cost is just going to eat them alive.
Yeah.
Right. Unless you have enough money to land bank and hold forever. Right. But ultimately, yeah, you're right. There's no new construction going on. And that's going to cause a problem, I think, in 5 years from now.
Yeah.
Because we're coming off the highs that sold back in 2017, 2018, all the delays, 2020. You know, if you guys remember, that was like peak real estate season when it was really hard to get an allocation for new construction sales.
Yes.
And all those are starting to take occupancy now. In fact, there's 25,000 new completions happening this year when we used to around 20,000 or so, plus or minus, right?
Yeah. Felt that for a couple of our rental listings too, because we had to drop the price just to compete with something new in the area.
Right.
Right. Because as a new building comes online, you know, you could see like 50,
Flooded with hundreds of units.
Hundreds.
150
I know.
listings for lease. So all different housing types.
And they all sit there for, I've seen listings sit there for months
Right.
at high prices.
Right. Because of the flood of housing that came onto the market. Yeah. The city of Toronto anyway. So if there's no development, like, yes, that sooner or later will get absorbed, especially with 1 million people coming to our country, if not more, every single year. Right. And newcomers that come to the country aren't even allowed to buy. Like straight foreigners aren't allowed to buy.
Right.
Unless you have a work permit. But even still, you got to pay 25% tax.
Right.
Right. And then you get that back when you get permanent residency. But that's still a lot of money. Not very many people can do that.
Yeah.
So they're almost forced into renting a home. So yes, sooner or later that those rentals will get absorbed. And because we're not building right now, the lag is going to cause a big problem in 5 years.
Yeah. We'll probably see a spike in housing prices go up in 4 to 5 years.
I think so.
Yeah.
I truly think so. So I think that really makes a difference. If you're going to be buying something in the spring, say you've been putting on the purchase for a long time because, you know, winter's kind of uncertain and you weren't really sure what's happening with interest rates. Now that we can get fixed rates, I know it's still high, right? But we get fixed rates, or compared to the past, it was high. You can get fixed rates in the 5%, 5.25,
Yep.
4.9, 4.8.
Yeah.
You know, if you get rates in the 5% range for fixed rates, for 3-year fixed, it's not too bad.
Right.
Yeah.
Not too bad.
It's a good product to wait it out and see what happens in 3 to 4 years.
Yeah. Because there's talks of even no rate cuts this year, right? If housing goes, I mean, yeah, sure. The central bank looks at the 3 preferred rates of inflation, which one of them excludes housing. So maybe if housing goes off the charts, then they'll still maybe not raise interest rates, but we don't know. We don't know what's going to happen yet, right? So there's talks of that. And if you can get a fixed rate for 3 years, hold yourself down for 5 years, and then refinance later on when that comes up, I think it's not too bad. And even at, you know, if you get prime minus whatever, prime minus half at 7.2, you're still looking at 6.5%. So it's not horrible compared to the 8s or 9s at our peak, right? Percentage rate. So, and there was a chance when people thought that, shoot, are we ever going to go back to the 80s? Or we saw.
Yeah, it's so gone.
Well, I mean, it could happen, right?
Yeah.
Like where we get double-digit increase. That must have been a scary time for a lot of people.
I feel like that would be disastrous in an economy like now, especially because so many people are leveraged and so many people have such high value mortgages.
Because the price of housing is so high.
Because the price of housing is so high. So if they did raise it beyond, you know, to 2 digits, I think that's when we see a lot of foreclosures happening too.
Right, right.
So I doubt they would want to go that high.
Yeah, and it causes a problem for sure. I mean, I think every piece of the economy is all integrated, right? So the one lever will, like, it's kind of like that butterfly effect. You know, one little reaction causes one action causes a reaction over there. You know,
That's right.
You don't really know. So there's a lot of risks in the economy, and everything's all tied together.
That's why I buy lunch in Chinatown.
Why?
Butterfly effect.
Okay.
Every dollar I spend goes somewhere else, and it multiplies
Because you're a wife.
through the money multiplier effect.
Sure. Okay, man. How do I do this? All right. Okay. So get into this. If you're buying something in the spring, I think people are kind of, buyer sentiment's back up again. People are feeling good. And maybe it's time to get that extra bedroom. Maybe you have a kid on the way. Maybe it's time to downsize. Maybe, you know, kids are out of the house and it's time to move into condo life now and start traveling and all that kind of stuff, right? Now the pandemic's over. So what are some strategies we can use when you're out there house shopping or selling?
Definitely know what you want out of the transaction.
Yep.
It's good to be prepared with information and to be realistic about what's happening in the market, which is there's a lot of uncertainty. So be prepared for either best case scenario or worst case scenario and know what those options are.
Okay. So when you say be prepared, what does that mean? Like know what you want. What does that mean?
Well, let's say you're well, first of all, let's say you're buying, right? The market could turn around at any moment. You could suddenly have a flood of a lot of buyers coming by, and we're bidding on houses all over again, just like it's 2019.
You know, that happens quick too.
It happens so quickly.
I thought
It's
like, well,
very
maybe it's just
unpredictable.
Toronto because we have so much population here. Like in smaller cities, it doesn't happen.
I mean,
It's
it
very
happened in
slow moving.
Mississauga.
Well, I mean, still GTA.
80 people showed up to one house. Like, that's quite a lot of people to fight against.
Sure, but I'm talking about like smaller provinces, like across Canada. I'm
Across
sure it's a
Canada?
little bit different. I'm
Yeah.
sure it moves a little slower, but in the GTA, it moves fast because there's a lot of people here.
Yeah.
Right. So yeah, once the weather changes, which is happening now, and the buyer sentiment changes, which is happening now, and interest rates come down, which is going to happen at some point sooner or later,
Floodgates.
then exactly it's going to be floodgates open, and things get crazy quick.
Yeah.
And you know how I notice these things is when our listings, all of a sudden I start getting calls for this and like showing us, hey, you offer whatever. And then like 2 seconds later, I hang up and there's another call coming in
Yeah.
for the same thing.
Yeah.
And that actually happens really, really quick.
Very quickly. And well, that's what I mean by being prepared as a buyer. I mean, if you go into the search with a mindset that you have to commit to a marathon and not just a sprint,
Right.
then I think it's a little bit easier for you.
So meaning that if you could be a marathon, you take it slow, you take it steady, you go through it. Don't rush into it. Kind of
Exactly.
be prepared. If you're going to buy something and you want to say you want to move in, I don't know, let's say this summer or the next fall or September before school starts or whatever, right? Then do your research now. Pay attention to the market.
Yeah.
Look at the areas where you want to be.
Yeah.
If you don't really have a specific location, all you need is a detached house, just to say, and your budget is whatever, X amount.
Yeah.
Then look at where that budget buys you. And it could be in Mississauga, it could be in Richmond Hill, it could be in Northern, it could be in the city of Toronto even. Right.
Yeah.
Right? You don't know. It could be in Scarborough.
Right.
It could be different pockets, but just kind of explore. And you know what I tell some of my clients? I tell them, rent an Airbnb for a week and see what it's like living in that area. If that's what you truly want to do and you're not really sure where you want to be.
Right.
Get a feeling of the area, get a sense of how it's like.
Yeah.
Yeah, and if you're looking for a condo, maybe there's different pockets throughout the city as well too, which have different vibes and atmospheres, right? Like you love the city, you used to love the West Side,
Yeah.
but you've always been an East Ender. You tried the West Side for a little bit.
I tried it. Yeah, exactly. I tried it for a year and then I'm like, you know what? I fully believe in what the East Side is doing and just ended up back there.
Yeah. So I think that's some strategies as well too. What about for selling? What kind of strategies have you seen? What do you think people should do if they're thinking about selling right now?
Well, the good news is that we're seeing a lot of sellers try the offer night strategy right now. That tells me that they're being more optimistic and that we're probably going to see more listings in the near future, even more so than last year.
I hate the bidding war strategy. I really hate it.
I hate the bidding war strategy, but I like to use it as an indication that the sellers are probably going to list more, which means that the buyers have more options.
Yeah. So speaking with bidding wars, I am seeing failed offer nights, depending on the price point, obviously, and depending on the location.
Right.
But I'm seeing that. And the reason why I hate them is because if you're a buyer, it's almost unfair to them. I know they're trying to open up blind bidding, fine, whatever. They'll never get to it because no seller actually wants to sell blind. I mean, open. They want to sell blind.
Right.
Right. Because they want the most money possible. But the reason why I hate it as a buying side, as a buyer, if I was a buyer, you don't know what the price is going to be. You don't know when it's an offer night. And you don't know, you know what I mean? It's just, it's too much. And you're competing. It's like, no one wants that.
Right. Yeah.
But I start realizing the market gets hot when every single one of the listings in a particular search field that we're looking for a client becomes bidding wars. And that kind of sucks. And I get it from the seller's perspective, right? Because the seller just wants the best price possible. And they just want out. And they don't want to show their cards. They don't want to show what price they want to get. If they want, let's call it $4 million, but they listed it for $3 million, 2.999, and they had a bidding date, right? They don't want to, they just want to, they want it sold. They want the highest price possible.
Yeah.
Or maybe there might be situations where they truly want whatever they get after $3 million because that's their cost or whatever. Like that's just, their number.
Yeah.
And they'll take whatever and they have to sell.
Right.
Yeah, I was gonna say no. At the end of the day, I think they should just, or people who are listing their properties should really just leverage the knowledge of your hired realtors. Hopefully, it's the Broadview Avenue Group. And now that's because as their realtor, they should know what type of market they're in. So and they can put a strategy towards that. So blind bidding could be, and then you can just employ whatever is the best strategy. At the end of the day, you should pull that knowledge from your realtor to determine what is the best price to put it at. And I think that matters a lot. And then you have all the other things like keep your property presentable or market it or however they market it. Things along those lines.
Yeah.
So let's expand on that a little bit. So when you say knowledge, what are some things that people should know that we take for granted that we know?
Sorry, can you say it again? Say it again.
Like, what are some knowledge items that, you know, the general public could probably benefit from? Like, what is our value as realtors? Before you get all cheesy about that, I think there's a lot of value, right?
Yeah, like here's the thing. Everything is public information, but the hard part is interpreting that
Yeah,
information.
it's the way you analyze it.
Right.
Yeah.
Right. And you make decisions based on it, because there could be very consequential situations where if you're depending on a certain sales price and you buy first and you don't hit that sales price, what's going to happen? Or you don't even sell. Like, say you're upsizing, right? What happens then? Or if you sold, but you can't find exactly what you're looking for and what you want, and you're forced to move out because you have a deadline coming soon, which is a closing date, and you haven't bought anything yet, and everything you buy, actually that happened before to one of our clients, right? Where they had to only specifically look for vacant properties because their clock was running out. They had to sell, and they had to sell by a certain date, and that time was approaching. They had to be out of the house. So what do you do in that situation, right? First of all, how do you avoid that situation? That's what our knowledge is for.
Yeah.
Second of all, what happens if you're in that situation? Do you end up renting, staying in a hotel, putting it in storage?
Well, our skills are also contingency planning,
Right.
and also giving options, making sure that everyone is informed.
Right. Right. And also, and speaking with pricing as well, too, that's what we're talking about, whether you do bidding wars or no bidding wars, what to price it at even, what to position it at based on what's currently available, where we think the market's heading to, right?
Yeah.
Things like that. How to prep your home for sale, things you got to do to get prepared for it. You know, if you're thinking of putting your house on the market in the spring, now's the time to start getting the cleaners, the stagers, the handyman, the movers, all that stuff. And you can reach out to your realtor to find out if they have contacts for that, or even if it's included in their services.
Right.
Right. So I think that's a big thing as well too. What else can you get as a tenant, as a buyer, if you're a tenant renter, what can they look for
With a realtor.
Yeah. Well, I mean, you experience this as well too, right? Rent controlled versus not rent controlled, and what the benefits of that are. So if we're looking for a non-rent controlled building, then if you plan to rent for a long time, then you want to make sure your rent is stabilized.
Right.
Right? Versus somewhere where it's not rent controlled, and next year the rent could be jacked. Right? If you get a bad landlord or greedy,
Yeah, which happens quite often.
which happened to Neil. Yeah. And we won't, that landlord shall remain nameless.
Nameless.
But it happens, right? So, and then maybe even like location wise, if there's upcoming development in that area and you don't want to be in that area because there's going to be a building right in front of you or something, and it's going to be loud and noisy for the next 2 years, right? If you're on the streetcar, the Queen King streetcar that's coming as well too,
Yeah.
that's going to be hell. After having lived through the Eglinton
LRT.
for me, right? Like, that's hell, I'm telling you.
Yeah, I'm looking
And
forward
especially
to
not there for a long time.
the Ontario Relief Line project.
Yeah, but you own it. That's different, right? But if you're renting there, what if you're only there for 4 years, 5 years? And that construction, you're living through that for 4 years. You need to expand.
I know.
You know what I mean?
I think it's city noise at that point. Like, you have to get used to construction in Toronto.
Yeah, I agree with that. All right, what do you guys think? Long-term predictions, values. What do you think is happening in the market? Should people wait? Should they buy now?
I'll take a stab at this. Based on what's happening now, I think if you're in a position to make a move, better do it while the market is relatively healthy. Like, we're not living in fear. We're not thinking about, maybe we're going to deal with another interest rate hike. Our inflation is still too high. The feds are still trying to solve this entire issue with how consumers are spending their money. So while things are healthy, if you can, within a safe margin, definitely think about making that move. But I think we do have a very thin line where it could potentially turn the other way. I mean, if housing does go off the charts and we suddenly start spending way too much money, maybe inflation will get up notch, and then the feds will be like, okay, we have to intervene yet again.
Yeah. Well, I mean, if you say the Fed, that means the U.S. because their economy is really strong, and that's actually happening right now. But
3.1% inflation.
Right. The risk of, that's Canada. But
No, US.
Is it really?
Yeah.
Okay, we're on the same, we're very similar. Okay, so the risk of an upside swing to inflation rates, whether it's in interest rates and whether it's in Canada or US, is relatively low. We have some sort. So when you say healthy, you mean certainty.
Yeah.
There's a bit of certainty where interest rates are going to go, and inevitably sooner or later it's going to go down.
Exactly.
The likely case that it will go down, like there's obviously a chance.
Right.
It's very improbable that it'll go back up. I mean, it could possible, but it's improbable.
Right. And this is for the foreseeable future where you will need housing over the next several years.
Right. So if you're in a situation where you do need to move because of life changes,
Yeah.
right, then I think you can get ahead of that.
Right.
And you know rates going to come down, and you know it's going to get crazy. Maybe get ahead of that.
Exactly.
And we're not out there giving you general advice right now. Obviously, every situation is different.
Mm-hmm.
So we have to look at the situation to really determine whether or not it's the right move to make.
For sure.
In the long run, with the way I look at it is that in the long run, not much supply coming, interest rates coming down, and people coming to the country, like a strong demand for people coming to the country, it's kind of like a no-brainer, in my opinion.
Yeah. Especially right now, since we're anticipating there's probably a housing spike in 3 to 4 years because of the pre-construction sales.
Yeah.
Well, rents are down right now.
Rents are down right now.
After, and I think it's going to continue to go down for the next couple of years.
Right.
But after that, I think there's gonna be a lull, and it's gonna turn around, and more people are gonna come to the country because we need it,
Exactly.
and it's gonna be an issue. So, but the case for renting over buying is that if you want to stay nimble, and nimble meaning that you can upsize. You know, you're single right now, let's just say, and you want to get into a relationship eventually, and you know you will get in a relationship and have kids or whatever. That means from a 1-bedroom to the 2-bedroom condo, 2-bedroom to maybe, I don't know, a small starter home, small starter home to expanding families, right? Depending which situation you're at, or maybe your kids are about to leave, and I don't know why you'd move if you've been there for a long time, but let's just say you were, and you want to downsize, and you want to eventually go into a condo. Maybe now's the time to do that, right? So there is cases where renting, let alone relocation and things like that, right? Like
for sure.
Going to the States for better, greener pastures, and you know, like. I want to do that. Anyway, no, there's a lot of reasons why you'd want to rent over buying for sure.
Yeah.
All right, I guess that's it. Any closing thoughts? No? Okay. Well, we'll leave it. If you have any other questions, you can always reach out to us. Just click below, book an appointment, and we will get back to you, and hope to hear from you soon. Subscribe if you like this somehow. If you like it. Okay, thanks, bye.
Thank you.
Add it up. Thanks for sticking out to the very end. I hope you got some value out of this. Do me a favor, please press like and subscribe. But more than anything, leave me some feedback so we know what to produce for you going forward. Thanks again.